Should be able to see that now. I'm going to go over pretty much standard because we were really only looking at indices last week. So I'm going to go through each day of the week, why I did trade, why I didn't trade. I think I have one mainly to cover, economic calendar. We'll look at some other markets along the way, just throw in questions and we'll just take them as we go. If you do have a question on another market, because there isn't one specifically from this past week that I saw that was too interesting, but if you did trade it, then I can always take a look and that can be part of this time as well. And then we'll look at this upcoming week towards the end. So let's jump into last week, pretty much last Sunday, and we'll just start with the economic calendar quickly. This is this week. Had a bank holiday on Monday. That means market mostly closed. So Monday I'm not trading anyways, but when I see a full close day, so this isn't a half trading day, it's not going to print a daily candle because we have this bank holiday. I'm not trading on Monday, obviously, but that sometimes will depend on if I'm going to trade Tuesday at all. There are cases where this Monday, because it's a bank holiday, basically does nothing. And then for that reason, because it's doing nothing, also not printing a daily candle, I then roll over how I would usually treat Monday into Tuesday. This week was slightly different because I don't know that for sure going into the week. It really does depend on how this trades and if it's adding any context for the higher time frames, if I can go into Tuesday with some sort of an idea. And then we have these other events later in the week, which are not high impact. This here is not FOMC press conference. So this is not a high impact news driver. If it was Wednesday, then I can be trading before 2 o'clock. It's unlikely that you would be holding an open trade at this point. This is very late into the day. If you're trading around 7, 8, 9 o'clock, what are the chances you really even have to concern this event? It's pretty low. Then we have these other two events, 8:30, GDP, PCE. These are both going to be varying from medium to low impact. No specific rules, not like high impact where you can't open trades before or hold open trades through. But you are going to know that volatility will hit the market at 8:30 on Thursday and Friday at some variability, whether it's very low or decently high. There's always that potential. We're going to treat this as an added volatility driver to 9:30 on indices, knowing that volatility will hit here. And like usual, I'm going to be using this for either if I'm not in a trade, this is added context because volatility builds context and shows intent by the market. That's the main reason. Or if I'm already in a trade, let's say a reversal is already formed, I already have my continuation signature, well then this can drive price further in my favor because it's bringing energy to the market. So this is how we're going to treat these events. We did have Monday getting decently active for it being a half day. So if I take a look at, let me just pull something up really quick. Monday here was giving some action, which I didn't fully expect, but it added some context here where I had the ability to go into Tuesday. It was providing enough that I could look at Tuesday as a potential day or just to give an idea of what Tuesday should do. Because that last week going into it, I mean, this is pretty standard, but Friday's close or just looking back on the previous week didn't give me much context for what my bias should be specifically going into the new week. And I'm always going to lean really far into how does Monday trade and what does Monday do that can tell me about Tuesday. And then what does Monday and Tuesday do that can tell me about Wednesday. That's the approach that I'm going to take. And there wasn't anything too specific here that I was looking at in terms of I need a specific bias. But once Monday, these few hours that we got, you can see that on the daily, we don't have a Monday daily candle. So it goes right from Friday to Monday combined with Tuesday. That's what I meant by not having anything on the daily. But we can see on the 4 hour or the hourly that Monday opens up here. This is the weekly open here and gets that really aggressive move. So this is adding context that we didn't have at that previous week close or when we were talking about this on Sunday. And seeing this here, the market did close pretty quick, just 4 hour, where did we close at? 12 o'clock, I think it was 12. So we got this as Monday. And this was enough to give me an idea that we should be seeing higher on Tuesday, because we're getting that really aggressive move back up. And there's nothing really here that I'm pointing out in terms of relevant lows. So I'm pretty much just going off the fact that we have this daily low, which is, I'm pretty much almost exclusively using the hourly here, because again, we don't have a Monday daily candle, but we have this low, which is a relevant low in this context. Monday aggressively turning back up into the range. So we do not need to return to Monday's low. So if Monday expanded away and I look off the highs and we have failure swings, that's going to tell me Tuesday should be a continuation. So we have failure swings here on NQ. And we have a similar picture being painted here on ES as well, up to this high. We have that change in state of delivery after running out a low. So this is setting that framework of now, because of what Monday did. One, I know it's a bank holiday. I don't have to treat Tuesday as a Monday, meaning you can actually go into Tuesday with some form of an idea that we should be going higher. Then you look into your confirmation. And then Tuesday continues to develop. And this is what I shared, I believe somewhere in this candle, wherever it was. You can look back in the analysis channel, but we can mark out where Tuesday opens here. So this is Tuesday's open, looking for highs, both ES and NQ. Move this over one. And we have lows being ran out in that continuation. And then trading higher. And I'm basically, again, not using the daily because there's not much here, but just following the idea that we should be trading higher. And when we close above a very clear down close candle in the 4 hour that ran out these lows, once we close above that, expecting the continuation already, this should be respected. And this is basically the daily profile. And then you drop down, expecting that this should support price on the way up. When we go into the lower time frames, that's where the delivery on this around the open was not ideal in terms of getting on side and actually executing this idea. And that's ultimately what we care about. The bias is cool when it plays out, but we're trying to trade these moves, not just watch them happen. This is where it gets a little bit tough. We're looking for post open. I know some people may have seen this as an entry. We can mark this out, and I don't hate this. We're just getting really close to that open, and this is where I keep trying to emphasize, when you're right near that open, the market is not moving very fast. You're 20 minutes before the open and you're using this as your entry. You just have to be really cautious. You're either very high conviction on this because you're confident this is going to start breaking away, but just know that when you're entering like this, that small 15 minutes of waiting for that open to come through, when it's going to get very volatile and it's likely going to decide if this is going to work out or not. It's usually a very small sacrifice just to wait for the open. But if you took this trade, then that's just something to think about. Ultimately, we're looking through the open. And this here makes it very difficult, in my opinion, to get on side with this move when we make these really large run down and then trying to turn back up. On the 5 minute, it wouldn't make sense to take this close. It's a very large stop loss. You can try to refine the time frames down and maybe find something, but the 4 minute isn't showing anything. Neither is a 3 minute. I can't go much further than this. And when you get that really large series, we're not going to be entering with I don't even know, it's probably absurd, 140 point stop loss. Of course we're not. And in the continuation, you can maybe consider this. I wasn't fully interested. I like to be positioned at the open. These signatures are not that interesting to me, although this would be potentially the only valid thing that I would see as an entry. This gets invalidated because the stop loss does not make sense. And then you have a 15 minute close above here, which can act as a potential entry. But this is one where I'm not going to be getting on side with anything really below that, just because the way that the market traded, I can't expect to get on side there. This would have been the only one where I could see that and say, Okay, that's fair. We still have a draw above. We're still playing off that higher time frame idea. We should be going up to these highs, the failure swings. So I don't mind that. That's something to think about as well. I'll look at a few questions here before I move on to the next day. What do you think about the up close candle after the down close on the 3 minute around 9:45? I've seen you use that logic. Yes, so we're referring to 3 minute here, this down close candle. Now, I have done this in the past where you do have a really large series, and this is almost that case where if this is going to trade higher, there's only so much further. Like this low should hold in place if it's going to trade higher. If this were to come back down, you know, we're no longer expecting this to be a bullish move. It should be turning there, undoubtedly. This here could be an entry. Now, the reason I wouldn't really find this entry anyways is because the 5 minutes not showing it. The 4 minutes not showing it, and it seems like it's more forced. And then this here in itself, for me personally, it's probably not the entry that I would take. Like it kind of comes back to that idea of if you were really high conviction on this, then maybe. But it's not an entry that I would probably find to be taking here. I mean, obviously it's not because I didn't trade it. It's a nice entry, but in a live market, I wouldn't feel very confident in that. Primarily an options trader on stocks, Nvidia, Tesla, SPY, trade 1 minute, trying to implement protected swings, failure swings, get confused on the 1 minute. Should I switch to a higher time frame? Yes, so I would. I mean, from me, you're always going to get the answer that stay on a higher time frame. 1 minute wouldn't be fully necessary in my opinion. I think that idea of wanting to use failure swings, protected swings, that's going to come from a minimum. You don't have to go all the way to the extreme if you're used to scalping. The extreme would be sticking with the daily, but you could start implementing that on an hourly time frame and then breaking down to entries once you have that framework, maybe 15 minute, 5 minute, 3 minute. It's usually a good place to be, and that's going to clear up an insane amount of noise, especially when you're trading options and stocks. That 9:30 open is obviously the most aggressive time of the day. So the 1 minute gets very active and can give you a lot of false signals. That's why, like, especially trading the open when the market can move crazy, having that initial plan, or if you use, let's say you're using the hourly for framework, you want to be very committed to that idea so you're not getting caught up in other things. For indices, please, it's about a relevant low. Looking at the monthly, once a month. Now it's looking more consolidated. What pair is this? So it's monthly. So yes, that's low that you have marked out as a relevant low, right? Basically previous day low or the second daily low. That's correct. And that next one you have marked out is very distant from it. So that would be considered the next relevant low for the time being. So you have it marked out correctly. The continuation entry pointed out doesn't touch any point of interest. We can use it because it's clean. For entries, you don't technically need a point of interest, at least from the higher time frame basis. The only thing that to me requires a point of interest is working off the daily time frame. When it comes to even the day itself, putting in a higher low of day, it doesn't have to occur at a point of interest. It just needs to make a shallow opposing run. But entries, like this 15 minute here, is just a down close candle on a 15 minute time frame that you get the close above. We do have, I believe, we look to the 5 minute, a run on a short-term low. So that's a confluence, but there wouldn't be anything that I would have to say, you know, on an hourly or a daily, this entry has to occur at a point of interest. It just needs to be a valid signature in that continuation. Which this technically would be. You're looking for large wicks on the 5 minute before you consider the lower time frames. There's only a few reasons I'll drop below a 5 minute. And this could be one. Sometimes, like when I see this, I'll give you my thought process. I look at this here on a 5 minute and that this is turning. Sometimes I'll drop down to a 4 or 3 minute, and this becomes the series of opposing candles that can be entered on, because I can position much better than this close here. You can see sometimes on these higher time frames what the lower should look like. This is just a case where you start refining that out and you actually don't get what you're expecting, which would be because that wick is showing there's a pause, price moved up and then down, but the lower time frames aren't providing it. So I'm looking at that, but I'm not going to drop and see that 3 minute entry in this case. Next week, we'll go through next week towards the end once I get through these days here. Yes, I can actually I'll go over what I put in that answer in the chat once I get through the days of indices, just so I don't get too off track. If I should remember, if I don't, just remind me again in the chat, because that's actually a good one to go through. How's it going, man? Hope you have a nice day too. So that was Tuesday. We'll go over Wednesday, where the expectation remains the same for Wednesday. Just following anything I mentioned, just roll over that bias, because again, we still have these highs open for Wednesday's trading. So we're looking to the highs here. It's quite simple. There's no room to short this on Wednesday. When we're below, we have failure swings above. So the higher time frames, you're restricted to saying, I really only care about a bullish daily profile to get up into this high. It's pretty straightforward what we're looking for. This does occur a bit faster when we look at the daily profile. 18 candle, 1 o'clock, potentially putting in a low. So we can look at a continuation when we break this down. Here, this is another one, the way it reverses. Sure, we have an initial reversal here during the London session. That can set an expectation to see price continue to the upside. And this here is where you can potentially put on a trade. This is 8 o'clock, 15 minute. The close is not quite there, so you get really close on this. And also, if we use a higher time frame, we're gonna see how this gets filtered out. But Wednesday, zoom back out. Let me cut this off because it keeps resetting me. So 15 minute lacks the close. This is the only one that could potentially see an entry. So we go back to NQ, ES. We see that 15-minute close above. It lacks it here on ES. But let's say if you did get filled on this, because ultimately we would need to get to this high. That's your target. There's nothing really beyond this point. So you want to make sure that this target will make sense. The close is a bit deep. I'm not big into like the retest entry, but let's just say you were entering on this. Does the risk to reward make sense? And to me, it's borderline. I know on this day, I honestly don't think many people took this. And it ended up, if you're rolling through the open, a lot of this is, when we get to this point, even if you're waiting for the open, we're looking at this as a potential entry, and this comes into more of, are you using YM for a divergence? Because we have these lows left behind here on NQ, these lows on ES, but then we look to YM, and here you have a lower low. So this is really dependent on how much do you use YM for divergences. I personally don't. There's very few cases where I may consider it, and that's why I really don't mind this. If you're using YM, this is a valid entry, because we have, that turns this into a divergence, and this close becomes an entry that can be taken up to that high. And then the risk to reward may make even more sense than that previous trade. All right, so now we're pushing a 2R trade to that high. This is one that I think is okay, dependent on what's your relationship with YM. And that's really what this comes down to. ES, yeah, it doesn't get all the way back down there. I mean, ES technically would be the same idea if you're using YM. So you have that as a divergence. But it does take that high because we're targeting relevant highs, but we know at relevant highs, that's where we can see reversals. And that's exactly what we get. And this is just showing how when we're focused on the right highs, this is where we're getting reactions to come from. Hitting that high and then dropping off of it. Yeah, I know everyone's a bit different with YM. It does get tough trying to compare them both. What's your thoughts on looking for divergence when they are correlated? Sometimes they're not following each other. So that's where I think it can be done with, I think I try to avoid maybe explaining this to everyone because it's like, how do you know when they're correlated? It brings in more subjectiveness, which is fine. But for some people, they may not enjoy that. I think it is okay when YM is more so in sync with ES and NQ, because there are times YM is completely opposite. And when there's that huge lack in correlation, that's going to show, to me, that's not great for a proper divergence. So yeah, you can try to make that assumption when it's really correlated, which if we were to look at, I mean, Wednesday here on YM, you know, it's fairly close. Not too bad. Has anyone asked about the monthly fair value gap on ES? Does this close invalidate it? Unlikely, because I won't go up to a monthly time frame. My max is 99% of the time the daily. So that monthly gap probably won't have much of an effect on how I'm going to approach my trading, at least. It could hint at maybe a longer term move, but ultimately day by day, it's probably not going to really change my process. Just because I like to avoid higher time frame ideas to that extent, because whether you're right or wrong can really throw off, you know, taking in the new information that the market's giving you every day, every hour, every minute. What's going on, Trista? I didn't get how to use SMT when we find an SMT with NQ and ES. Do you trade that one that took the low or the strong one that's opposite? When you have, so that was a case in the 5-minute, technically NQ. So I use divergences between ES and NQ. This is not a case where that was present. If this was the case, let's say, I think strength and weakness is maybe a more detailed topic than just divergences when it comes to taking the right pair. But let's just say ES at this same point, instead of it being a higher low, was a lower low. The most simple thing you can do is just say that's hinting at ES being a potentially weaker pair because it's making a lower low while NQ is making a higher low. So if you're longing, a higher low hints at strength. So NQ may be the better pair to take in that case. And that's just how you would use SMT at pretty much the most like baseline level. Right, yeah. And then once we get this move down, you could go in and counter this move. I guess maybe I'm taking the more conservative route, but you actually do run into a potential where that can be fair. I think it's tough a bit with the daily profile, but you do have valid framework to counter this back into the range because we are trading off what we were targeting was a relevant high, and now we are potentially manipulating that with ES being a lower high. So it can be fair to look at that. Now, if we were to look on 15-minute, you have the close, continuation. These wouldn't be valid continuations on the 5. If you were, you'd have to refine this down. Like, yeah, this here I wouldn't hate. I mean, the delivery after is not fun, but this technically is valid. If we look at this here, shorting this, and it might result in a small break even, maybe a small loss. Like, let's say you're trying to get at least this on it. I don't even know if it reaches that. Okay, yeah, see, you'd probably go like even on this. I mean, it's brutal. I don't think you would end up losing on this trade, but the delivery, why is that so hard to say? The delivery after you enter is pretty poor. Not that you would have to always anticipate this. It would just likely result in not much going on after that. But this is valid in terms of going into the day, looking for this high, and then the development of this around the relevant high could be countered back into the range. But this is pretty brutal. After that happens, obviously, there's no more interest for the day, even though it's 12 o'clock. The day's over at this point. We do know that there is news at 2 o'clock. That's going to bring volatility, but I'm not interested in trading FOMC meeting minutes as an individual event. I really don't care what it does. I'll just let that print the rest of the daily candle and then go from there. That's really the process around this here. So I'm just pointing that out because I don't hate that. I don't think you're wrong for taking that if you did. And then we'll just roll over to Thursday here. We'll go back out. Thursday, we have news at 8:30. I'm aware of that. I'm going to use 9:30. And I know some people were able to take this trade because we had NVIDIA after hours on Wednesday as well. That's going to bring more volatility, more context for what we should be doing on Thursday here. And that pretty much brought a very active open. So if you look at ES, this high was still there. And some people even took this trade, which is very impressive. But NVIDIA news closes that previous day strong, and then that follows through into the next daily open up into this high. And then we're basically getting into the charts around here on Thursday. So we're letting this context build. And at this point, you pretty much only have one option for this to be a day that you're going to trade. And I did this as a lesson in the lessons channel. This comes back to basically any time that we open the charts during late London, early New York session, and you see that overnight session, these hours of the day, expanded pretty significantly in either direction. This is where you're going to be pretty much in a lower quality framework overall, and you're going to have two options. One of them is, if we're going to seek a continuation, why this is lower quality is because if I want to see this continue further, well, we've already expanded to this degree from the daily open. How much range is left on this day to keep continuing, especially considering we've reached another relevant high? There's not much room left on this day, so that would be uninteresting. The other side, your second choice, is if this starts trading off this relevant high, which it does, if I am going to counter this back into the range, basically trading that back down, which is valid, I have to be thinking about the large wick on that daily candle, because again, that expansion, if I'm going to trade this to the downside, creates a very large wick on that daily candle. And that there is basically telling me, this is just the narrative in the daily candle, that we're not going to see much of a sustained expansion through that opening price. We understand this because reversal days, this is just super basic daily candle stuff. Reversal days, when they have very large wicks at the highs, that does not create large candle bodies past that daily open. We have very small opposing runs from the daily open, we get very large candle bodies. That's where, if I'm going to short this, the opening price of that day should be near a maximum expectation, meaning if I'm going to put on a trade to the downside, my 2R target should be right around that daily open. And just doing that, 90% of the time is going to be very consistent and helpful, because you're going to see right around that daily open, we're going to be really struggling to get much further past that. So that was the only option. It's either trading this towards the daily open or I'm going to skip on the day. And we allowed this to go through 9:30 as we were discussing. And that first signature, what I'm looking for, is what we ended up getting because we're forming a series of up close candles. The 9:30 open comes through, and this is a very well confluenced entry. So we have the standard opposing close candles, up close and a bearish continuation, close below. So that's baseline, what I'm looking for here. But we're also going to pair this with confluences, which make this the most interesting entry for me. That's pairing it with 9:30. So that's the open, what we were waiting for. 9:30 drives price to close below these up close candles. That's confluence number one. I like to see that. Number two is running on a short-term high. That's another confluence. And then the third, another one we can add on this is a divergence. Lower high, where if we go to NQ, we have a higher high. So that's a divergence in that continuation. I mean, we're stacking a lot of things here to say that this is a fairly confident entry. And I'm also going to be considering coming back to, because I don't want to lose sight of the narrative here. Got a good fill on this. My 2R is right here, right around that daily opening price. So it's a little bit past it, but it's not extreme to the point where it wouldn't make sense or I'm working against, the nature of the market. That's all things considered here and why this trade, this entry makes sense once we get that close. There was also, I know some people broke this down. I don't think it's necessary because there's not much more I can ask for on an entry. But if we were to go to a 3-minute, I know some people took this as well. 3-minute close after the open and then got the same move. Now I traded ES here because it gave a better look at positioning on this. So I'm positioned really close to the series of up close candles where my stop loss is going to be placed on that opposing swing, versus NQ broke away a bit more aggressively and that widens the stop loss on a trade that I already don't have too much expectation to trade very large in terms of points. So this was the close here. And that's why I preferred. ES wasn't showing strength, meaning I'm not concerned with ES turning on me, but it's just giving me better positioning closer to my stop loss. And it just makes more sense risk to reward wise. But nonetheless, if you took NQ here, same entry, whether it's this 3-minute, there's no error in that either. It's not wrong to be taking that. So that's why I was looking at ES there as well. And then once it hit a 2R, I'm scaling out majority. And then I trailed my stop loss, got trailed out here. And yeah, I made another push down, but you can see it. It's not really interested in expanding much further. So that was that full trade there. Let's see. Suppose we have a Tuesday reversal from a relevant point of interest. Now that we're on Wednesday looking for a continuation. Daily invalidation is yet to be invalidated. Daily validation. Really on Wednesday. Would you be able to draw that out or find an example on a chart? That may be a bit easier because I don't know if I'm going to answer your question correctly. If you do, I will come back to that. Yeah, no rush. Zooming out of the 1 minute, moving to a 1 hour. Here's 1 hour on a stock. There's a swing high that hasn't been taken. Multiple swings lows, which are higher. If you want to scalp, would it be a good idea to target that swing high? So that's where it closed last week. Higher swing lows. So I mean, that there, I mean, it's very small to that high. To me, when I look at that chart, if I were treating it like the way that I trade, and if that was, let's say, indices, I wouldn't trade until that swing high you have marked out or that lowest swing low you have marked out was hit, because they're both, the market has failure swings to both of those points. So I would watch how price engaged there and then move forward. That would be my interest. I wouldn't technically trade to either point, if that makes sense. All right, so that was Thursday, one trade on Thursday. Now we get into Friday, where my interest was continuation to the downside. I know there's 8:30 news here as well. I'm going to be noting that. But that's going to be my initial interest, or what I'd want to see on this, because the most recent reaction off a relevant swing was a manipulation of this high, and I want to see continuation off of that. This is even one where if you weren't interested in trading this large wick on Thursday, which is completely fine, there's plenty of times where I will skip on this, you would just roll over into the next day saying, because I didn't want to trade that large wick, I now want to look at the following day to create a small wick below 50% of that daily candle wick, and then that would create an expansion day. That's what you would be looking for. That would be the main process here. And that's what I wanted as well. But ultimately we need alignment with a bullish daily profile before acting on this. And that's just going to look like we're opening up here, trading higher, forming an intraday high, and then trading off of that aligned with a daily profile. Here we did have ranged, potentially ranged, and then we can look inside on the 15-minute from this daily open. And the focus was this intraday high. I know we have a little bit of a mess to the left here, but it's easier for me, if you go to NQ as well, to just focus on the intraday high. That's going to mean the most. We had, if we break this up, our run on the intraday high. And then some news hit the market with this even before 8:30. So this was somewhere in 8 o'clock. It was something external news that wasn't planned. That's not something you would have seen on the economic calendar this year. And this to me just messed up most of the framework, and we'll kind of lead into how the development works. This here makes it really tough because ultimately this isn't a good condition at this point to then look for this to trade lower. But when we have that news enter the market, we're now running out the other side of this daily low and then aggressively turning back up into the range. So we have manipulation of a high, manipulation of a low, both the highest high and lowest low intraday. And now we're just in a very odd position that just does not favor expansion, especially when we come off this low and trade really deep back up into this high. This just becomes less interesting to me. And I had mentioned, ideal conditions to expand, just so you build your eye for this framework, because this is just what it would look like when you're going to get a quality opportunity that's going to follow through well. I mean, ultimately, it would look like, if I had to completely repaint this picture, I would not want to see any opposing manipulation, especially if previous day low, because we want to trade into failure swings. I would not want this. I can even just block this off with this here. I would not want a manipulation off the lows. I want clear protected high. And then this would be a far more ideal framework to be trading, where even if we could get an entry before hitting these lows, this sets up a much better daily profile to expand versus we are now manipulating both sides of the market here. And then again, we manipulate this low. And now we make a really deep retracement back up into this high, really deep retracement back into this low, returning. This is not something that I'm going to be entering within. And the framework is just not very quality. It just really comes down to this event here. 8:30 news did not do much. And then at that point, once you get really deep back into this high, it's just pretty uninteresting for me based on what I like to see when the day should expand. Just the general picture that should be painted. We like to trade into failure swings ideally, and we like to trade away from very clear protected swings. So that example you have noted there, when it took previous day high, that would not be concerning in that case, because previous day high itself seems insignificant there to me. If previous day high was a relevant swing and it was trading off of that, then I would likely be more considerate of it. There's plenty of times where a previous day swing doesn't mean that much. Took this short on Thursday, got stopped at the low. Can you please tell me what I did wrong? I think, yeah, I think I saw this one. So this is, I think I asked you, when we see this entry, I don't know if it's gonna, okay. So from Thursday, right, we had this initial one at the open. This is where that idea of what I was talking about with the narrative itself, when I think you mentioned you weren't on the charts here, which I guess is fair for not taking this. Ultimately, we'd want to be positioned up here, but that comes back to the idea of this is your daily open. When we get a very large run from that daily open, we don't expect that to be supporting expansion through that daily opening price. So you are entering below the daily open here at this point. And the narrative does not suggest that we should get a very large expansion through that point. So that comes back to being positioned at the right time, and they're kind of passing up on some of the earlier entries, which would have been of more interest. So the same thing here. That's your daily open. You'd want to be positioned, whether it's ES or NQ, on this day, where you're basically taking off at that daily open, not entering a new position. That would be the main pointer for that there. Yeah, ES didn't take previous day low, so it kind of causes a divergence right here. But I'm going to focus on both, on what they're both doing, and then ultimately, once we get that drop here, we manipulate previous day low as well. No, I meant the current daily open. So that day that you're entering within, we can block this off. You were shorting, let's say around here. This is the current daily open. So Wednesday's daily opening price. That's what you want to be focusing on when entering within Wednesday's candle. You get that really large opposing run. That creates that large wick on the daily candle. You don't expect much of a move through its own daily opening price. I don't know, the screenshot you shared was from Wednesday, I think. Oh wait, that is Thursday. Sorry, I'm calling it Wednesday. That's on me. This candle though, same candle I'm pointing out. I don't know why I thought that was Wednesday for a second. So yeah, same idea though. Thursday's daily open. Sorry about that. Yes, so a daily relevant swing when price is trading off of that. That's what we care about. Previous day high and previous day low doesn't always mean something. Sometimes it can, but it depends on what the context is. Do you always need SMT at every reversal? Me personally, no. I'm just going to use that as confluence, or anytime that I see failure swings, the first thing I'm going to do is look at, are these failure swings actually a divergence? Because that's going to completely change my approach at that point. That'll be the main time that I'll look for it. Is it a requirement? No. Do you use fair value gaps at all? Just taking into consideration? No, so I don't. I may overlap that sometimes, meaning I'll note out a higher low that just happens to be a gap. It doesn't really mean that I'm weighing more on it. So I'm only going to really point out on the daily. Sometimes opposing candles will come into play, but it's almost always just highs and lows of what I note as relevant swings. they can, sometimes be gaps, but ultimately a fair value gap is just a higher low. There's someone trading the fractal model. What do you recommend key takeaways from expansion model to add on? So, I guess it would depend. Let's say you're just trading hourly 5-minute. That's just like a general thing. I would probably be focused on relevant swings in the market. That's probably be the main thing, just because you need something to frame a reversal off of itself. That would probably be the main one to point out. And then maybe, I think sometimes you want to be a little bit more structured in maybe the time window that you're focused on. Meaning, like, you don't want to be going into, let's say, an hour before close, 2 hours before close, and looking at any hourly swing point and just saying, let me enter on this, because there's just no structure or logic around that. I would tie it into maybe I want to focus around the open or a main move for the day, something along those lines. I would probably bring that into it as well. Ultimately, you're going to want to trade certain times of the day. So to me, that's the daily profile and late London to early New York. That's the type of move that I'm looking to trade. For example, one candle close with a large rejection after tapping the daily fair value gap. Does this mean that there's something for you the next day considering the fair value gap, or you don't care about it at all? I'll only care about it if what's considered the fair value gap is what I'll call a relevant high or low. So not always. I'll try to think of an example here. Yeah, like this is kind of one, right, where this was a relevant low to me. That manipulation tells me continuation off of that point. And it does end up being a gap as well. But I don't even see this, right? My perspective wouldn't change if it was this. All I care about is that low anyways. So there's going to be times where it overlaps, but the fact that it's a gap in itself isn't adding or subtracting anything to me. I at this point, I've been doing this for a while, that I just block it out. I don't really even see it. And there's nothing wrong with using them if that helps, but I've found it to be more of an unnecessary piece. Yeah, I think that's probably a good thing to mix in. And that's something you can apply. That's probably the one thing. I'm going to focus on it on the daily, but you can apply that. I think it's important to do that on nearly every time frame. Daily, you could do it on the hourly if you want that too, because it's going to apply in the same way. So it doesn't have to restrict you to the daily if you don't want it to. You can go to 4 hour or 1 hour and start noting out those highs and lows, because it's going to have a similar effect. The only time I would trade in an afternoon session, and this is again super uncommon, if I'm trading FOMC press conference. Outside of that, it would have to be like extremely specific. But yeah, that's not really where my focus is. Got better leaving out fair value gaps. Yeah, I think it's something that, right, like it's just an added thing that doesn't need to be there. Do you still take a trade if we have failure swings on the 5-minute? Yeah, that's kind of what I was mentioning, that it applies to almost every time frame. Entries, everything that comes down to entries, I think is some of the more, not entries itself, but tracking these lower time frames. That's when you get just a lot more in detail with things. There's going to be certain cases like this one here from this week where I'm going to be noting this out, where my stop loss, I'm pretty much going to call that a failure swing, because this is just such a clear defined low, and we are trading really deep back into that, but not quite. I don't want to place my stop loss here because it's on a failure swing. I don't want to see it be like this. But there are certain cases. Let me think of. When was the last one that I'm trying to think of? Was it from last week? Was it this? No. In here? Kind of like this. Maybe it was on yes. Because yeah, there are specific cases, kind of like, yeah, let's like take this for example, where lower time frame wise, let's say I'm using like a large series of opposing candles. Like this here wouldn't really throw me off that much. I'm focused on these opposing candles, and then once you get, you know, this is the type of run that I'm looking for. That creates a run on a short-term swing. I wouldn't really worry about this here in this case. So entries, it gets a little bit more open, I would say, but it's more so just on your entry itself, where you actually place your stop loss on that entry. You would just not want it to be on a very clearly defined failure swing to another, even on a 5 minute. That's where I would start to apply it again. But I'm not going to focus on like this here, this here, this here, this here, this here. If I'm not actually entering on it, it's more so about your stop loss. All right, so we got through a lot from last week. We'll talk about economic calendar. There's a few things going on. It's NFP week, first week of June. So Friday is high impact news. That's just a given for any first Friday, full week of the first full week of the month with Friday. NFP 8:30. You want to know that's there because that's high impact news. That's going to be the only one in this week that we have a specific rule or protocol around for not entering before, not holding trades through, and then only really looking at price after. And NFP is pretty much going to set the tone for that entire day. What NFP does is pretty much the bias, the narrative, and everything along those lines. For Monday, I'm not worried about it. Slow impact news. Tuesday, 10 a.m., Wednesday, 10 a.m., Thursday, 8:30. These are 3 low impact events. I would not worry about this one here. I pretty much block that out. Not really relevant to me. But if I'm trading Tuesday, Wednesday, or Thursday, I would be aware of 10 a.m., 10 a.m., and 8:30. Just as these are definitely low impact. So I would just be aware that they are in the market. And if I need to, it's more unlikely, especially with these 10 a.m. ones, that I would be waiting for price to, go through this time and see what happened here, because I usually will position prior to that. But I'm aware that they're in the market and they're added volatility drivers to the 9:30 open. And I mostly trade indices. That's where I'm really where I care to be. Now, with the way we got previous week close, I will be letting Monday go. I'm going to initially, I don't prefer, if I'm going to trade a continuation, I don't love when it's right back up into a previous manipulation. That's just that one thing that I don't love doing that. I would prefer if this is, a failure swing that we can trade back into. But I'm still going to initially see how Monday trades in relation to this here. Down close candle, running out these lows. And I would just be noting, what can Monday do relative to this point here? If we're going to see a continuation, Monday is my confirmation of any idea. And it's either going to be Monday ranging or reversing above this point, and that could give us a hint of what I should be looking for on Tuesday. Because really, either way, regardless if this goes up first and then down first and then up, you're going to be trading into a previous manipulation, which I like to get that added confirmation, see what Monday does. But I'd be focused on this here, really in relation to that. It's going to be the same on ES as well. Same type of close. Focus would go there for how Monday prints. Now, other markets here, I didn't see any questions on other markets. I don't think there was too much here. This is, yes. Oil, it looks okay. These are relevant lows. Maybe a similar thing. If Monday were to confirm, if oil is going to manipulate this range, trade to the opposing side, that could be something. Yeah, these are going to be more backup. I guess indices overall has just had my attention. And these other markets, I think, did we even talk about Euro last week? I think we did, about potentially seeing this higher. Monday's open was just not great for confirmation of that idea. See if we have any other questions to run through. What's the significance of the starting price of the 23rd for NQ and ES? What? Oh, this here. Oh, that I noted out. So yeah, I was noting this because if we're going to continue, down close candles that were closed above should be respected. And when I'm noting out down close candles or just opposing candles in general, I'm going to take from the opening price of that. So if we were to go down to a lower time frame, this is what I'm looking to see if this is respected. And it is, because I'd also use this as something that price should support price. That's really any time frame as well. It's here on the daily, but I would do the same on hourly entries. Really anything. It's going to be the opening price, whether it's a single candle, if it's a series. Not saying this is what I'm focused on here, but let's say it was a series and we closed above it, you would use that highest opening price if it's down close candles. If the market reverses from failure swings, should I skip the day? Most of the time, yes, that's going to be the case. If the market gets really, I mean, we can maybe take this for example. Let's just say we didn't reach up into this high. Let's like just give you the picture. Let's say we had that. Failure swings. There would be no option. I would first check NQ because you want to see, did NQ make a higher high here? Or sorry, ES, correlated pair, because if it did, well then this is a divergence, not a failure swing. But this here, let's say this was a real failure swing, you would not have the option to trade this to the downside because the higher time frames, not interested in trading away from failure swings. Yes, okay, yeah, let me pull that up. So I pinned a message in the expansion chat. It was, I'll just link it in the chat too. Basically the scenarios that you're going to run into when it comes to marking out relevant swings, specifically on the daily. So this here. And we have a couple of examples. One, because I like to focus on swing points. That's going to be the easiest thing that you can do. But I also wanted to note out when previous day swing or when non-swing points are relevant swings. And this is really the difference here. So this is an example where we have a swing low in the market and prices manipulating that low. And that next swing point to the left is all the way down here. So really large separation where this can be one relevant low and this can be the next. But the question is, what about this one here? Am I going to focus on this? And when I'm using a swing point as a relevant low or high, any other highs or lows to the left, my only focus is going to be on really other swing points. The difference is when we have a case like this, where there's no swing points anywhere in this market. Let's say we're focusing on this day here. We're going to look towards the previous days. Even though they are not swing points, this is all we have to work with. So previous day high here, I can look at that, but I do not use this high because it traded really deep back into this previous day high. And then we have a lot of distance until that next high. So this becomes a relevant swing, even though it's not necessarily a swing point on the daily. The same thing goes here for this next one. Let's say we're opening up here. I mean, we already opened up against the high, but this is a previous day high. We have a lot of distance to this next high here. This here, when we run that out, this becomes a relevant high because there's a lot of distance to that next one. So it comes into the terms of really these two examples that you can pull from that will, be compared in terms of when to use swing point, when do you ignore highs and lows like this, and then when you don't have swing points in the market, what are we focused on here? So that's just what we were pointing out, these two main examples. Anything outside of this is just going to be very one-off scenarios that can happen, but this is where the focus should be for noting everything out. And this is really important because everything's going to start with this concept. Pretty much every opportunity is around this as a starting point and how price reacts here. How do you think the second swing point value changes when the next two candles are failure swings? So like this here, this case, this was a very odd week. I remember looking back on this, we were actually shorting these highs here because these are relevant swings in this context, right? And then in the moment, I mean, sometimes looking back on price more generally, it's hard to think about it, but in a live market, you're taking in probably more details than this, but we're shorting off these highs back into the lows and it kept failing, getting down here. And I don't think the market became interesting again until we started breaking away from these points. But yeah, even though this is a swing low, if it trades really deep back into that, we're not really interested in trading that higher off of it. You have to wait for price to either come back and run out that low again, or for price to break away and create new relevant swings. That's basically the process of what you would have to follow in cases like that. But yeah, I remember that being a lack of follow through time here. Ultimately you'd want to see this and then just immediately start pulling up to these highs here. Eventually, obviously it gets there, but not in the way that you would really want to see. So yeah, that's those two examples. Good to go through those as well. So yeah, we have next week, last week. Yeah, that's everything. Got through all of last week. Economic calendar this week, NFP on Friday. Want to know that's there. Won't affect too much. I'm just going to be pretty much allowing Monday to print, and then we're going to go forward from there, seeing how price trades in relation to 50% of this wick here. That'll be what I'll initially be looking at. Yeah, other than that, I think covered everything. Good session there, and we'll get this uploaded before end of day if anyone joined late or wanted to come back and review anything. Try to get that uploaded as soon as possible. Sounds good. All right, everyone. Enjoy the rest of your Sunday.